Hello and welcome to another Major Market Movements End of the Week Market Review for June 19th, 2015. I'm Quad G, and in this video we're covering the FX markets and the some energy markets, the equity markets, and the 10-year note. Starting off with the US dollar, we did have this drop coming down back here just a couple days ago, and we've popped up since with what looks like a three-wave move, a corrective move, filling in some of the manic drop, which was expected. And now, if the downtrend is to continue as I expect, we should see the price drop off considerably going into next week. I do want to see the price stay below this trend line here for sure, as there is a potential rule of 4 or rule of 5 breakout to the upside that is possible if that line was broken. So a key level of resistance there as well. The QG3 is still in a bearish alignment, and you can see again today we're closing below the 3 EMA, which lets us know that we're still in an impulsive drive to the downside while we maintain closes below that 3 EMA. The dollar on the weekly, we close again below last week's intra-week low, and so that's bearish, closing below this engulfing candle to the upside, which opened up at 93.23. If we were to close below that next week, that would also be very bearish. Excuse me. Yeah, the EWO is fiddling just around here, around the 0 level. So nothing there that we can really use in our analysis. The RSI, we've come down here and it looks like we have broken the 40 level, which is an indication to me that we could slip further down to test the 30 or even lower, with that 40 level not holding as support. And MACD on the weekly is still open to the downside, and on the daily we're open to the downside as well. So US dollar overall picture still looking very bearish, especially while we're below this short-term trend line. Let's take a look at the euro. All right, so the euro popped up here. We're getting a three-wave corrective move down, it looks like, filling in some of that manic pop-up as expected. And now, if all is going to go according to plan, we should see this market continue higher. You see in the QG3 is still in a bullish alignment to the upside, and again we're closing right at or just above the 3 EMA. The euro on the weekly, we close up again. We put in a positive candle, but unlike the dollar, we're not quite closing above last week's extreme, in this case the extreme high, intra-week high there of 1386. Didn't quite make it. So the euro on the EWO, again, not much to show you there. The RSI here did briefly break above the 60 level, but we've looks like we're closing today just right at it or just underneath it. So not quite a clear, clean break above 60 just yet. If we get that next week, that's going to invite a further run higher into 70 or even 80 on the RSI, which would probably be several hundred ticks higher from where we're at right now. The euro on the MACD on daily is open to the upside, and on the weekly we're open to the upside as well. So that's bullish. So I say that euro is still looking plenty bullish, but we need to stay above this low here at about 1200 or so. Not that one, not the Aussie dollar. Not really trading this market yet. There's still not enough there for me to really give a firm call on as far as the spec trade goes. We did get a buy signal in the QG3, and that's fine. We'll ride that out. But the spec side is still not certain that we've put in a bottom just yet. And plus, my plate is full. I've already got running 4 different FX trades right now, and that's about my limit. About 4. Stretching beyond that just becomes a bit overwhelming with the amount of analysis, other analysis that I need to do as well. All right, so Great British Pound looks like we're closing up high again. We may have stalled just a bit as we spent a couple days above the upper Bollinger Band, so we may be pulling in here just a bit. I don't think too far before resuming the trend higher even still. The weekly solid close higher. We haven't seen a weekly close this high since back here in about November of 2014. So just an indication of the strength of this move. And also, I should point out, just back out on this chart, there is a trend line here, right here, that we're coming up to test. Now that that trend line would look like we may have just tested it, and if it's going to break, then we need to see break to the upside. We need to see the price kind of coil up right here. If we get a severe rejection, then that's a different story. But my suspicion is that it may take a few days of some sideways coiling, maybe some a little bit of sideways and upward advancement a little bit for a few days, and then we might get a chance of breaking that trend line, which could be a neckline. We got potential of a left shoulder here. There's a head, right shoulder, and now this is a neckline. It's a bit it's a higher incline than I would prefer. But if we do break it, there is a lot of potential there for going up significantly higher. More on that in a moment with the Elliott wave charts. All right, the EWO, even though we have a higher high here, we still have a lower high in the oscillator compared to the last swing high. So in order for us to wash out any potential buildup with a negative divergence in this oscillator, we're going to need to see the price drag this oscillator all the way back up and exceed this last swing high. So we'll see if it's able to do that or not coming up in the next several days. We clearly broke the 60 level. We've popped up here to test the 70. Now the 70 to 80 zone is an oversold, or in this case overbought conditions zone. This is between that 70 and 80 level. You're looking for potential topping action. Doesn't mean you're going to get it right away. It's just something. It's just time to be paying very close attention to that potential. And the MACD is open to the upside as well on the daily, and on the weekly we're open to the upside as well. All right. So overall picture for Great British Pound, still looking plenty bullish, though after pressuring this upper Bollinger Band for a couple days, I wouldn't be surprised in at least the short term, we might get a few days of just some minor corrective action before piling on higher again. USD JPY. All right, so it looks like let's go to the day. The day closes down, not quite below yesterday's intraday low, but still looking bearish. The the QG3 is producing a bearish alignment to the downside, and you can also see that the Bollinger Bands have pinched. So while we maintain a presence below that 20 DMA, this is a bearish setup, especially if we come down here and start pressuring the lower Bollinger Band and cause the Bollinger Bands to flare. The first indication usually will be the top Bollinger Band will curl up as the price pushes against the lower Bollinger Band. And if that takes shape, then that's just going to be further indication that we are definitely in a bearish trend to the downside. And the weekly closes as an inverted hammer candle. Not the best placement, but it does set a key top high at key resistance at 124.44. EWO on the EWO daily, we do have the negative divergence that has built up over the last several months. So we could be finally seeing some fall through to the downside off of that. And the RSI, we're still in the 40-60 zone. A break of 40, obviously very bearish. Could see that next week. And then the MACD is open to the downside on the daily. And on the weekly, we're still somewhat neutral there. Not quite committed to the downside or upside, just parking right next, signal line parking right next to the baseline. All right, let's move on to the Dow. Overall picture for our USD JPY is certainly looking bearish. All right, so the Dow pops up here. We had this look like a 5-wave impulsive move up, 5-wave impulsive move down. Typically, that's a very bearish setup. Whenever you see a 5 up, 5 down, or 5 down, 5 up type of reversal. But this market, it likes to defy all the odds, and we've popped back up here and taken out that last swing high. So this market's definitely looking like it's not ready to cave just yet. It wants to hang on there and survive yet again for another day. And I think this pop-up is probably reacting to the proximity of the price to the 200 DMA, which can often be a key level of support. Obviously, if we come down here and close at or below the 200 DMA, that would be an indication that where that 200 DMA is losing its potential to support the market, and it could break and allow for an anticipated drop-off. On the weekly close, we almost, let's see here, we just about confirmed a bullish Harami. We got three weeks down. Last week closed as a long-legged spinning top candle, and then this week comes up, which is a potential Harami, bullish Harami, and then this week comes up and closes. That open on the negative candle was 18.17 and 82 cents, and this closes 18.15. So just underneath, almost confirmed that reversal. I would say it's close enough, and you set a key support level low at 17.698. So while we're above that key level of support, I would anticipate more follow through to the upside. But break that level, and you turn the picture around very quickly. All right. Again, the EWO not giving us much useful information. You see over the last few months, it's just been chopping sideways, contracting, all in and around this zero line. So, just showing you just how choppy this move is, just how neutralizing this move is. Not giving, just basically trendless, momentumless over the last several months. And the price did come down here. It just ticked below the 40 level, but we bounced up here. If this market is indeed bearish, I would want to see the RSI stay below the 60 level for sure. The MACD on the weekly is open to the downside still, and on the daily, we've opened back up to the upside. So a mixed picture there. So overall, Dow, it was looking, there was some pretty good potential of a slide, but that's been washed out. So we're back into this very choppy, aimless, trendless, momentumless, market that is just an aggravation to trade. So I think it's best just to leave it alone for now until the picture clears up. Let's take a look at crude. All right, so crude oil, let's go to the daily. Crude oil, we're still in this choppy sideways movement, though I do think this is a buildup of energy. I think it's a cup that's being built, and I'll show you that chart in a minute. Basically a cup of energy that's being built, and then we're working on a handle here. And once this handle is finished, when we break above, especially above this 6180 level or so, it should, all this energy should let loose to the upside to finally target our 67 level, or if not even higher. That's very possible. The price closes right at the 20 DMA, so again, it's just not ready to take off and do anything just yet. And on the weekly, you see that we just have this contracted move. We've got intra-week moves high and low, but we close just very tightly in and around roughly this 59 to 60 level right in there. Not wanting to let go of that level, though it's certainly just tried a few times to the downside and upside. And EWO, again, parked right at the zero line. Just another indication of just how neutral this market is right now. The RSI still is the same picture. Not really wanting to commit one way or the other. It's just very comfortable with parking right there at the 50 level, which is about as neutral as you get with the RSI. And the MACD is open to the upside on the weekly, and on the daily, we're open to the downside just slightly. Right. So again, mixed picture. So I still think there's good potential in this market to the upside, but we're just going to have to wait a little bit longer for that to be realized, I think. All right, let's move on to some LE wave charts. Starting off, we'll back up and take a look at the FX markets. I got just like an hour ago, got a message from TradingView that they're no longer going to be supporting the intraday, or what's the word I'm looking for? It's not intraday. Basically, it's we're going to be getting EOD support, end of day quotes only, and not the intraday minute by minute quotes that we were getting. Real-time quotes. That's what I'm trying to get. Yeah, no more real-time quotes, I guess, for DXY. So a lot of this information I'm going to have to transfer over to another index that can give me some intra-day information, so we can follow along with these awesome TradingView charts. I really love this program. It's very useful, especially for what I do here with this, with what I do with you guys here, which is I can put in all this information and have it just automatically saved, and then bring it up at an instance, so we can, look at it yet again and not have to rebuild the information every time. Okay, anyway, we'll do our best here. I definitely think we got wave 1, wave 2 black, wave 1 blue, wave 2 blue finished, and now we're working on wave 3 blue to the downside. And as long as we're below that purple trend line there, I think we're still in good shape to see that happen. Possibly seeing the price collapse next week if we can stay below that level. The euro. This is very messy, and I have another alternate count that I'll just go over briefly with you, is that this is a wave 1, wave 2. This could be a wave 3, and this is just a very long, drawn-out wave 4. Wave 2 here looks like a sharp correction. So wave 4, this wave 4, could be a flat correction, and it could be a triangle, an A, B, C, D, E triangle. The one part of it that I don't like is that for a contracting triangle, you want to see A, B, C, D, and E all be three-wave moves. And I'm not seeing that here with this C wave. I see a five-wave move to the downside, which fits better with the 335 flat picture. And that's why I've got it labeled as a subwave 2. However, from this point forward, it's not incredibly clear what we've got taking shape here. We did get the pop-up. Looks like a back test of this orange trend line, which is all well and good. Filled in this manic move up. That's good too. So I would say as long as we stay above the the 1291-ish level right there, we're still in good shape for some upside. However, if we break down and especially challenge or break below this 1200 level, then I would have to say this uptrend is done, and we're going to see a stronger reversal to the downside. All right, Great British Pound. We've got wave 1, wave 2, I think is complete, or a wave C possibly of a wave. Wave 2 is just a bit larger. That's a possibility, but whatever the case, we've got this rule of 4 breakout, and let's look. It's played out perfectly. It's just a nice, beautiful run to the upside. And so if I zoom in here, I see a wave 1, I see a wave 2 completed, and now we're working on a wave 3 blue to the upside, which I don't think is finished yet, even with all this these wonderful movements to the upside. I think there's more to be seen. So far, my impulse count suggests that we only have 8 waves up, which is an incomplete impulse count, with 1, 2, 3, 4, 5, flat 6, 7, a sharp 8, and at least a 9, possibly a 9, 10, 11, 12, 13. That's another possibility. I do think that this market is interested in hitting a long-term Fibo retrace level of 61.8%. The Fibo there at 1.6187, which is an interesting coincidence. So I do think there's a good chance that this market will just cruise along up here to test that level, maybe exceed it. Right now, this could be a wave 3 to the upside or just a wave C. We really don't know which yet. It could be an ABC up or a 1-2, and now we're working on a major wave 3 to the upside. If this is a major wave 3, there may be no stopping this market till it reaches all the way back up here to about the 7200 handle with a wave 3 move. That is the most extreme potential that I can see. But whatever the case, there's no reason to bail on this position. It's a good one just to relax and watch and enjoy the show, and watch for signs of reversal if we get any. All right. Let's take a look at the USD JPY. We did get this three-legged pop up, though it was somewhat stingy, just stalling right there at the 38.2% Fibo before another impulsive drop to the downside. So wave 2 could be finished here, and so we'll be looking to maybe enter short right around this level with stops just above here to ride that wave 3 to the downside, which, as I pointed out before, we had the triangle thrust up, and now we're working on the reversal. Now the reversal usually takes as long or a little less long than the time it took for this triangle to move to the upside. So if we move to, no, that's not the one I'm looking for. Hold on a second here. Let's see. So go to the daily here. All right, so out of this triangle and this thrust up, it took basically 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 days to the upside. And currently to the downside, we're into our 1, 2, 3, 4, 5, 6, 7, 8, 9, 10th day. So I would want to see the price get down here and challenged where this thrust originated down here at that low of about 118.87. I'd like to see that level challenged or exceeded inside the next 7 trading days. So that's going to require that this reversal get a move on and we start into our third wave to the downside very soon. All right, probably Monday next week. Okay, so that covers the FX section. Move on to the other markets here. Let's go back here and take a look at crude oil. All right, so crude oil again, working on this energy buildup, if you will. I don't think the CF2 may not be finished just yet. I think we still could get another jab down to backtest that blue trend line and then pop up finally as we head on to our final 5th wave to the upside, which, here it is. Here's my label. Which I think could hit 67 at least, maybe even higher. Here again, here's this cup and handle pattern that we're working on, and with a rim line right there at 61.82. I break above that rim line, basically breaks this energy buildup free to push the price higher. So anticipating that coming up fairly soon. Natural gas, we zoom in here. Wave 1 complete, A, B, C. C may or may not have completed yet. Not a terribly strong reversal candle. We just got a very small incremental low under A. So while we're below 286 there, this little micro swing high, I think there still could be maybe one more chance to come down here and test that 61.8% Fibo at about 269, 270, something like that, before popping higher. So, but once we break 286, then I have to say that that confirms that wave CF2 is indeed finished, and we're going to start wave 3 to the upside sooner than later. Some of you newer subscribers may be wondering, what is the big deal with natural gas? Why are we chasing this thing? But this is looking at the long-term chart, this is one of the reasons we're chasing this market, because it looks like there's a lot of strong potential to the upside with this inverted head and shoulders pattern, with the right shoulder looking like it could be complete here, which would allow for a very strong lengthy run up to 11, maybe even higher. So this also marries up well with the current solar cycle, which I've shown the subscribers before. How if we go back here to the solar cycle peak of solar cycle 23 peak, after that peak, and you saw the decline of sunspot activity on the sun, we started to see this move to the upside with the 20-month moving average climbing higher. And I think if we were to compare the two movements, we had the initial move to the upside, similar to this, upon moving into the sunspot decline. And then we had a correction, but it produced a higher low than the last swing low inside the previous sunspot incline period. So I think if we're going to repeat the same kind of cycle here, it looks like the higher low should be finishing up, and then my expectation is that we'll see a strong move up, similar to these moves up. And if we're starting down here in the $2 or $3 range, and we're looking at maybe a $14 move up to $14, several times where we are now. That's just an amazing run, and that is just too difficult to pass up. So I think it's best to be angling to get into this market on the long side and try to maintain a long position for these for a quick move up. Obviously the move up in this cycle, had its choppy moments as well. So it's natural gas is just a wild market. It likes to shoot high and then shoot right back down very quickly. And so I would expect the same kind of movement as we trend higher going into the years ahead. The same kind of movement. You'll see some quick shots up and then quick reversals as well. So let's see. Let's look at. All right, here's the NASDAQ. So, we had this nice ending diagonal move to the upside. It looked like it was complete, but now it's not moving as expected. When at the end of an ending diagonal, and the anticipation is to see sharp, quick moves that very quickly retrace all of the choppy upside movement from the ending diagonal. But so far, since the end of that ending diagonal, we've just seen this sloppy, choppy sideways movement that is starting to look like a triangle with possibly an A, B, C, D, maybe a three-legged move down for a wave E possibly, and then another thrust higher still. So you can't really rely upon this ending diagonal anymore, even though we haven't produced a higher high yet. My anticipation is that while we're above 43.62 or 92, we will likely see at least another thrust to the upside. Taking a look at the 10-year note, we did get what looked like a reversal candle yesterday. We got a little pop-up today in the continuation, the contract continuation chart here on TradingView. We're not even close to challenging the swing high of 127.07. However, if we look at the September contract, we exceeded yesterday's high. I did not expect that. We popped above it. So we kind of got a mixed picture here. It could be that this is a rollover period, and that's what's caused this odd movement here, and we may not be able to entirely rely upon that high at 127.07. So we may be looking to back out of this market for now and let it wiggle around a little bit more to confirm that a top is in fact in before holding on to a large short position. All right, so that ends my coverage for the peripheral markets for this week. Hope you all have a great weekend, and we talk to you later. Adios.